So my task today is to introduce to you our keynote speaker, and I am honored for the opportunity to introduce our President and CEO, Patrick Harker. President Harker has served in this position since July 2015. And if you're interested, his full impressive bio is on the website. I'm just going to give you a very quick summary that in the last 6 years at the Philadelphia Fed, it has been awesome that his unique background and experience and his interest in fintech have made him a perfect leader during this digital transformation era. As the dean of the Wharton School, President Harker was basically running the best business school in the world, especially in the finance area. And as an engineer with a PhD in engineering, and as a professor at the Wharton School, he actually wrote a fintech research paper, and that was in the 1990s, well before the term fintech became a buzzword. So this unique combination of finance, engineering, technology has made it quite natural for him to really deeply appreciate the potential roles that fintech could play in the financial markets, and also their impacts on the real economy. So under his leadership, we have been able to accomplish quite a lot around fintech, including working to support an ecosystem that would allow small banks with limited resources to access today's technologies. And we also see that he does care deeply about the underserved and the unbanked population. So one of our goals has been to help banks overcome these obstacles and for us to help create a more inclusive financial system. So, and you can find more interesting facts about President Harker online, but you might also want to know what he does on the weekend. And so he is a very skilled woodworker, that's what I heard, and he has the skill sets necessary to transform unfinished pieces of wood into something much better to its maximum potential. He has made his own bedroom set, for example. Good woodworkers are not only technical, but they are also artistic and patient. And that's perfectly the skills that we need for the monetary policy decisions in this new financial landscape. So I've heard much about he builds new things all the time, and happy to report that he still has all his fingers. So here, President Patrick Harker.
Thank you so much, Jalapa, and there's proof. I have all my fingers still. So again, thanks so much for the introduction, Jalapa. So welcome, hello, welcome, and thanks. It is so great that so many of you have joined us for these virtual office hours. And while by holding these events virtually, this event in particular, we're missing out on some useful hallway conversation, not to mention some really tasty snacks at the Philly Fed. It is terrific. So many of you were able to join us with just a click of a button. So now, before we proceed, I have to give you my standard Fed disclaimer. The views I express today are my own and do not necessarily reflect those of anyone else on the Federal Open Market Committee or in the Federal Reserve System. So here at the Fed, as you know, we wear many hats. We're a bank, a supervisor and regulator of other banks, and the largest collection of economists in the world. We have the ability to lend money, to foster payments and settlements, and to promote consumer protection. And as Jalapa talked about, one of my real passions, community development. We also have the power to convene, and that is precisely our aim with this program, to facilitate face-to-face discussions with individual banks and fintech firms about responsible financial innovation. So we're delighted you're here to learn more about how innovation and technology are affecting the financial landscape. Now, these meetings can be and should be two-way learning opportunities for all participants. Banks have tremendous regulatory expertise, and fintech firms have deep wells of innovation expertise. But this will also be a learning experience for us here at the Federal Reserve. Your insights are crucial to what we do here every day, So please, please don't hold back. If you have ideas, let us know. I'm particularly glad that we have so many representatives from small community banks here. While I probably don't need to belabor the importance of community banks to this particular audience, I think it sometimes gets lost just how central community banks are to our economy and indeed to American society. So just consider the numbers. There are more than 4,800 active community bank charters across the country. And of those, almost exactly half are in communities with fewer than 50,000 residents. Community banks, those with $10 billion or less in assets, collectively hold more than $3 trillion in assets. You don't need to rewatch It's a Wonderful Life for the 100th time to get a sense of how vitally important these institutions are. COVID-19 and its associated economic effects not only emphasized the importance of community banks, they have also heightened the risks to the sector in a world where more and more business is conducted online, like we're doing today. Given their strong relationships with local businesses, community banks were absolutely essential to operating the Paycheck Protection Program, which kept so many small businesses, so many, afloat during the pandemic. According to my Fed colleague, Governor Michelle Bowman, community banks have made up about 40% of the total value of PPP loans issued. It's probably no exaggeration to say that PPP would have failed without community bank support. But economic shutdowns imposed to curtail the spread of COVID-19, particularly those that shuttered bank branches, also demonstrated just how important digitization is and the perils of falling behind on financial innovation in fintech. Online platforms have gobbled up an increasing number of, for example, home mortgages. And one banker in our area here in the 3rd District recently told me that because of labor shortages in his area, he has been unable to reopen his bank lobbies even as the pandemic has waned. Now, if these trends hold, expect more and more use of digital solutions. So during these office hours, I would encourage bankers to consider digitization opportunities for your institution and customers, as well as innovative opportunities that align your strategic plans. And tomorrow, we will hear from district bankers about their experiences with fintech partnerships and innovation. Now, there are many opportunities, not only for serving your existing customers, but of course also reaching new populations. So think of the creative ways fintech could be deployed to reach the under or even unbanked, for instance. Now, I understand, of course, there are challenges. There are clearly challenges. Smaller banks often simply don't have the workforce or the cash to first research and investigate, and then ultimately invest in costly fintech platforms. They lack the economies of scale that bigger banks enjoy. Setup costs can be prohibitive. And to be frank, there are occasional cultural differences between the move fast and break things ethos of many fintech suppliers and the more risk-averse sensibilities of bankers. And those risks are real. Consider the astonishing rapidity of technological development. There are serious and understandable concerns that a year or two after making an expensive fintech investment, the technology will already become obsolete. You don't want to be stuck with a bunch of buggy whips a year after the invention of the Model T. And there can be a hesitancy to embrace new technologies on the client side. Of course, we've seen that. Paper checks and cash, for instance, have endured in part because people are so very comfortable with them. It is precisely because of these opportunities and these risks that these office hours are such a great opportunity for all of us. Constructive dialogue between banks, fintech firms, and us, the Federal Reserve, will help us to listen and learn from each other. Now, the Federal Reserve, for its part, is very supportive of innovation. We're here to convene, to support, and, of course, to supervise. So right now, we're going to hear from Bill Spaniel, Head of Supervision at the Philadelphia Fed, and Board of Governors Deputy Director Art Lindo on community bank partnerships. So again, thanks so much for being here today. Enjoy the event.
Thank you, Pat, for that kind welcome and really those thoughtful comments on how FinTech is shaping much of our world today. For those of you who don't know me, I'm Bill Spaniel. I'm the head of bank supervision here at the Federal Reserve Bank of Philadelphia. And much like Pat, my comments will be mine and not reflective of the Federal Reserve Bank of Philadelphia or the Board of Governors. And joining me today is Art Lindo, a colleague of mine for quite some time. Art is currently a deputy director over supervisory policy at the Board of Governors of the Federal Reserve System. Prior to that, he was a chief accountant for quite some time and has spent most of his time developing policy, regulation, and supervisory process and procedures for the financial services industry on behalf of the Federal Reserve. So Art, welcome to the Fireside Chat. We're glad to have you. And we're going to spend the next 45 minutes or so talking about FinTech and innovation in the financial services industry, talking about how the Federal Reserve views that and what may be coming down the line or how we're thinking about adjusting our own practices as we move forward. Also, I'd remind people, if you want to ask a Q&A, we will have Q&A at the end, and there is a link in the chat box on your WebEx that you can do that, or you can enter chat on the WebEx as well. So, Art, let's get started. It's clear from President Harker's standpoint that FinTech is changing many of the environments we operate in. It provides a lot of opportunity, but also comes with risk and opportunities. How are you seeing, from your perspective, FinTech impacting the industry, and what, if anything, are you overly positive about or concerned with as we move forward in this new environment?
Hey, thanks, Bill. Good morning, everyone. Good topic. First of all, the excitement for me is that this is happening in real time. A lot of technological innovation is not new to community banks. You have seen parts of this during the last 30 years. You've kind of embraced it. But what's different about now, if I'd say something, is the pace of change. I mean, innovation is happening at a much faster rate than it has over the last 30 years. And it's coming to bear on day-to-day things. So, example, yesterday I was thinking about what I needed to do personally with my home computer. And I was running out of hard drive space because I download a lot of music. I went on to Amazon, I talked to my son, bought a new hard drive, will be here this afternoon, right? So my son will come by tomorrow and he and I will put it into the computer. That space of time between yesterday, me having this, and today, getting a result that is tangible is what we're talking about. And in real time, that's what's happening in our industry. So I'm excited personally about all of that, making it practical for community banks to serve their customers with all these things are precisely what we've been spending our time on recently. And this is to stay. So excited about that. Think about some of the things related to that are the concerns we typically have as supervisors have to be done in a safe and sound manner. So we're balancing that in the space of time, but it's also just about the way it can transform business and make financial services accessible at the most minute level. So Bill, I'm excited about that. And those sort of things are what we're factoring into our policy perspective.
So Art, I think you raised some really interesting ideas, particularly, your example of a hard drive arrives at your door tomorrow. And good luck with that. I would never venture to do that. I'd be going to the Apple store. But given that, the pace, oftentimes I hear from bankers in the 3rd District, this is difficult to maintain the pace. It's difficult to understand. The policy doesn't necessarily keep up. Now, we are often very thoughtful supervisors, and you don't often want to be on the cutting edge. But how do you see us reacting to this pace in terms of the Federal Reserve, and either in listening or learning or being open to new ideas and things in maybe a way that was a little different than we have been in the past?
One of the things we're doing differently is acting quicker. So today we're doing office hours, which is sort of unique for us at the Federal Reserve. We do a lot of outreach, but we don't do as much of it in real time and back and forth with the public as we're doing in this space, which I think is great personally. We're also doing things like in the scheme of things, we need to collect information. We issued an interagency request for information. And the idea there is sometimes we go out with a rule that has to be fully baked or a policy statement. We're moving that up. We're doing that much quicker in order to keep up with the pace of change that happens in the innovation area. So those are yet just two examples of the way I think we're now responding in a little bit more dynamic of a way than in the past. So that's just top of mind what we're doing.
So Art, let me ask you on that, because I know, particularly for the bankers and maybe even for the fintechs, this is very unusual. When we're out for proposals and we have requests for comments, it's a very regimented process we use to communicate with people. And of course,
Right.
when I have my staff doing an exam, bankers, that has a communication technique to itself. We often don't have others. I do, however, see us opening up broader channels outside of our normal supervisory processes to get this kind of information, as you've talked about. And I think that's really advantage. And I guess I want to understand your take on, I've spent my time trying to encourage bankers, if you have questions or comments, please come to us, whether it's exam time or not. We really want to have an open dialogue on this. And I think we're seeing similar things with fintech. So, any recommendations for people on how to better communicate with us, or things we might be looking for from either institutions or fintechs on, not necessarily how we can find a way, but how we can open that dialogue.
Yeah, so thanks, Bill. I think two things I'll start with. One is there's a local connection, which is obviously you. All right. So community banks, they know you, they can work with you. First step is pick up the phone and call Bill or his staff. These are the sort of things that make this actually very actionable. Second thing, we do things at a national level. We try to coordinate them. I have an innovation office in Washington. They do outreach as well. And our desire is whatever mode that you have to connect to the Federal Reserve, use it. I like the local connection personally, because that's where I think over time we build the best relationships. But the national basis is always one where we're working collaboratively with our colleagues at Reserve Bank. So my team works with Bill's team, and we have these things such as the office hours we're doing in Philadelphia. We do these around the country. So we don't want to make any obstacles to get access to us. We're trying to tear those things down. So it's not as formal. You could pick up the phone. You could send us an email. We have fintechs coming in almost every day. Over the last 2 years, I don't know how many times I've been briefed, but I can tell you it's in a given month, there isn't a shortage of opportunities to chat with me, chat with my bosses, including the governors, about innovative concepts. So we're open for business, and we're doing this interagency as well. The other agencies, OCC and the FDIC, they do some of the same sorts of things. So we're doing that. So biggest thing is access, Bill. We're tearing down any sort of barriers related to access. We want to be real time, and we want to be relevant. So those are the sort of things that we're willing to do in order to make those two things happen.
So thanks for that, Art. I agree. I think there's an approach we have when we're actually developing policy and supervisory processes, and clearly when we're supervising, but I think the real value is these conversations where both sides learn. On that, here in the 3rd District, we've seen a lot of emerging fintech bank partnerships. Particularly saw this around the PPP program, as Pat mentioned, where banks were, clearly able to process their own loans, but were willing to partner with fintechs to provide a wider range, to get a wider audience to actually process PPP loans. We see that similarly, people automating the lending process or automating some of the deposit transactions. And I think community bankers really are feeling that this is the way they need to meet customers' needs in this world. Are there partnerships that you're seeing more broadly, or things where you think there are more natural connections and areas where maybe the fintech bank partnership is struggling a bit?
Yeah. So the types of things that we see cover the landscape. I mean, we have firms who are directly partnering with fintechs. We have firms who utilize products that were produced by fintech and they integrate into their system. And we have firms that are buying fintechs to get access to those technologies. And so we see the gamut. Where we think there's a lot of interest is things that are customer facing those tend to be the ones where I think we've seen a lot of interest in, not just in the community banks that are on the phone here today, but the fact that these are part of the bank's infrastructure being factored into it. For example, things that improve the accessibility of deposits, access to credit cards, for example. We're still looking at the traditional things when we talk about service providers, where a bank may deploy some operations to a third party. We're seeing we haven't got to what I call bank in a box yet, where everything that was done in terms of processing, payments, checking, and the like is really just now taken over whole scale. But we're seeing variations of that, different flavors of it. I'm not going to name names, but obviously there are some fairly significant size providers who kind of inched into the banking as a service, software as a service type of realm recently over the last 5 years. And with them, it's more about making it more accessible for the customer and making it easier for the banker to deliver that customer type service. So most of them have been in that space. And with regards to the third parties, I probably have to put in a word of caution at this point, Bill, because just by virtue of the fact that a bank may turn that type of operation over to a third party, it doesn't relieve them of the responsibility or the risk management of that. So just a word of caution might be appropriate at this phase. And that is to say, from a safety and soundness standpoint, these are still your operations. So you're going to have a bit of an understanding of who's doing what and what type of controls are in place. So that, irrespective of whether or not it's a fintech that you're utilizing a software product from directly, is something that's integrated into your system, something that is done through a third-party service provider, you, the bank, are the overall entity that's responsible. So in that context, I just think that's the consistent thing about being safe and sound.
So, Art, you've raised the one issue that we have found through our supervisory process the most, that third parties that you either turn over loan underwriting or deposit taking or deposit solicitations to just don't have the understanding of sometimes the complex nature of disclosures and consumer protections and the risk management standards. And in many cases, we have actually seen where banks have not paid as much attention to that as they were, and it has resulted in violations and enforcement actions on occasion. In that regard, I think we've got third-party vendor management guidance coming out. Are there other things you anticipate us doing to either get more information out or be clearer around where we see the risk in some of these partnerships?
Yeah. So, Bill, one of the things we're doing is trying to deliver products faster. So we have a couple things. We have a due diligence guide that we have developed with the understanding of how firms should do this, should be very, very plain English. So we've got that in the works. That's coming out. We also have other things that we're trying to use the actual technologies for, like AI, for example. One of the things that we're thinking is, in terms of compliance, AI might be more apt to do those types of artificial intelligence could be used to do those types of things more readily than we can. And so some of the tools that we're looking at are incorporating that type of technology to do the basic checking, that type of technology to do the basic monitoring, not taking the judgment out of it totally, because a lot of people think, well, if I turn on AI, I don't have to make a decision. Well, you still have to make decisions, but you can be a bit more informed. Through that process, you can analyze larger chunks of data, and you can do it in a manageable way. So we're looking at that. So all of our guidance now is directed toward demystifying that, making that very basic, making that understandable, making it accessible. So those are the types of tools that we're bringing to bear, and we're using them ourselves too in the supervisory process and planning to do so. And since you're the head of supervision in Philadelphia, you can think of a few ways that might actually help you do your job better. So those are some of the examples, the types of things we're kicking around. And maybe I'll just pause there and see if there's anything else we may want to address there before we go on to our next set of questions. So.
Sure. So again, let me remind people, if you've got a question, you can either use Slido through the link in the chat or put it in directly. Art, I did want to focus on something you had mentioned, the innovation office at the board.
Yeah.
Which is a recent, not I guess maybe a year ago, coming up with that innovation office. I'm wondering if you could just describe for people, because it's a little different than our normal offices focused on BSA or applications. The purpose there and what we're really intending with that office, because I think it is a little outside of the norm for us as a regulator.
Yeah, thanks for bringing that up. So, the reality is the way the board is set up is we have some very rigidly defined responsibilities. Bill mentioned BSA AML is just one of the examples. So that's fully established, has more of an enforcement type of perspective. We work a lot with law enforcement, FinCEN in particular, and that sort of work is in one category under my policy stack. A few years ago, what the board decided is, look, we need to be more forward looking. We need to be able to address policy issues that are happening, 3 years down the road and beyond, but actually position the board to be active today. And a lot of the things in the past have been things we had to respond to because of legislation. A crisis occurred. Congress produces some regulations. We spend 10 years trying to, get it in play. With innovation, we said we wanted to be more agile. So we set aside some resources specifically to be a little different than the normal Fed way of thinking about it. Not that we're doing this in a unstructured, I use the word cowboyish, and I don't want to mean that we're out of control when that term is being used, but we want to be more open to actually tapping into the creative juices. So whether we've done that is I have a team that works specifically on innovation. I give them more license to do things than maybe the more traditional. And by more license, I mean convening. We can bring in professionals to work one-on-one with us in areas where maybe the board doesn't have a fully fleshed out policy. We can bring in different viewpoints from the academic community, again, where we don't have this set policy, but we can work with, if you will, the public in a way and with the innovators in a way that's a little bit more like we don't have a sandbox yet, but more like a sandbox. So those are the sorts of things we've been doing through the Innovation Policy Group. So you'll hear a couple names. I'll just, tout out to a few for the benefit of the public here. You'll hear Kavita Jain. She's one of the officers in the group there, and you'll hear Molly Mahar. Those are two of the individuals who I work with on a daily basis about these things. They're part of my team that is specifically set up to be a bit more agile, to be a bit more, hey, why not? So we want to say yes to things rather than no, we're not open for business. And to do that, Bill, we had to change the way we thought about things.
So that's great, Art. And you touched a bit on an activity that President Harker had said was near and dear to him. And clearly coming through the pandemic, there's been a focus on reaching the unbanked, providing capital. I think PPP was a really, a good step on that. We've had the municipal facilities. How do you see potentially fintech and banks really playing a role going forward in terms of meeting kind of the unmet needs of these communities, and particularly that the risk profile may be different and maybe a little different than a traditional asset we may have seen a bank, and how we might find our way through some of those concerns.
Right. Bill, I can't tell you enough how important this is to the Federal Reserve and to both your team and my team. I work a lot, as you know, with the Philadelphia Fed on the provision of services to minority communities or underserved communities in the U.S. And for me, what this means is that we're looking at access. And for us, access means that whether or not, you think about how do you get a loan, and you and I have these great jobs at the Fed. We have these FICO scores. We can go and get a mortgage pretty easily, right? But we're old guys who are used to this, right? What about somebody who's relatively a new employee in the workplace, graduated from college, and is approaching finances from slightly a different perspective? Maybe they don't have as much of a history here that would develop a well-established FICO score, yet they have needs that are just as valid as your and mine. So what we've looked at are ways that technology and different approaches can enable our banks to provide those services. We don't want them going to the payday lenders to get those types of services. That's just a bad outcome for us as a society. So what we're saying is that making banking and banking services accessible to the broadest array of Americans is our goal. And the Federal Reserve is saying this not just at our levels, but at the governor level and up on the Hill. So making that a reality is what we're spending time on, and why innovation And through the use of community banks in particular to reach those crowds, that just makes a lot of sense to us, Bill. And in the end of this discussion has to be more access, not less. And more access comes for possibly using more tools, being open to different approaches. So all this can be done responsibly. All of this can be done quickly with the type of innovation we're talking about. But the realities are there. The public at large wants access to this. PPP was just one example. The Fed had to pull that together quickly in a crisis situation, working with SBA and others. And in the end, what did we do? We came up with an approach to provision services to the public in a manner that maybe needed to be done quickly, in a manner that needed to be done indiscriminately, in a manner that needed to be done effectively. I see that as the hallmark of what we want to do with this whole program in terms of making finance available to all Americans. So I'm excited about it. I'm getting old in the tooth here, so long in the tooth and old in age. I just hope I'm around to see all of this come to fruition because it's really exciting on a day-to-day basis. It is phenomenally a different change in the way we do things. So that's basically it.
So Art, I'm in full agreement with you, and I know a number of the banks here in the 3rd District have programs for people coming out of prison, going back to work. How do we get capital in their hands? We see, banks coming together in Philadelphia to put millions of dollars aside for small minority-owned businesses. And I think there's just so much potential in this that and I think community bankers knowing their communities well can help us with this, whether it's the minority deposit institutions or the local nonprofits. So I do think this is an area we have to focus. And in one of the ways I think this might be helpful is particularly alternative information. Mm-hmm. And as you know, on March 29th, the agencies went out with a request for how banks are using artificial intelligence or how they're using some of this in their day-to-day businesses. Let me ask you, what do you hope to come from that kind of survey and ability? What are we trying to garner that may help us with our policies going forward?
Thanks, Bill. And with that, you can still, first of all, submit your comments on that. We extended the deadline. The idea there is we don't know everything, all right? And bankers do have a good understanding of what the needs are of their customers. The tech firms who might be providing these technologies, I mentioned AI a few times already, they're in the midst of saying, what if, all right? So our RFI was designed to kind of answer that question. What if we did this instead of that? What if we were a little bit more bold in this approach versus what we've been traditionally somewhat cautious about? And the what ifs don't come with every idea succeeds, but in the volume of all these ideas that come out of an RFI, what we're able to do is sift through that and get some that we can work on a very practical level. Other jurisdictions call things like sandboxes. We in the US don't quite have that yet, but that's where you test some of these conceptual things to see whether or not they have legs, whether or not they should be put into real production. So what we hope to get out of the RFI process is along the same lines of what you do through a sandbox. That is, let's get those ideas together. Let's not only frame them in such a way that AI could be used for this specific thing, but hey, one other version of that is that AI might have this benefit, has some risk. How do we balance those two things? And that's what I think from the supervisory standpoint and the policy standpoint, we want to make sure as we move forward with this, it has that right balance. The balance is, let's not wait until everybody gets everything done that has to be done in order to make a decision. Let's take a little risk, be forward leaning, but take it in a responsible manner. And what this does for me is pull together the right people. So in addition to the data, we get the dialogue. And for me, dialogue is probably equally, if not, I won't say more important than the data because I love data personally, but the idea here is we got to get something in here that makes it less of an issue to talk to the regulators in the community and to talk with them. So this is where the Fed and the other agencies are saying, hey, we're here, we're open for business. Our shingle is out. Innovation is what we want to be a part of. People don't think about this, but the Fed runs systems. We're an innovator in our own right, but we're not trying to overshadow the opportunities to work with others in partnership. So we're looking at public-private partnerships. We're looking at private-to-private partnerships. We're looking at the whole panoply of options for these things to come together. And the fintechs, they're asking us the same question. Some of them ask, and this is a little bit of a concern, like, how can we do things that are bank-like? And our comments that come out of this sort of dialogue is not that you can't, but if you get a bank charter, there are some things that you need to be understanding that you're going to be responsible for. So it works both ways. It's more of a way to convene. It's also a way to pull in data and information. And it's a way to talk about what the potential future looks like, which again, I keep coming back to. I think community banks have a great deal to offer in this space. So I'm encouraged by that. I hope to see as many community bank respondents in this. And it doesn't, again, have to be that I have all the answers. It may be that I have an idea. And if anything, I know community bankers have ideas on how to meet their clients' needs. And this is an opportunity through the RFI to share some of that information with us.
So Art, that's really helpful, and I do hope people take the time to comment because we're much better positioned supervising with knowledge than supervising on what we think is happening. Along those lines, we did get a question on how is the Fed prioritizing these? As you mentioned, we're in Fed now, which is 24/7 payments. We're looking at a central bank digital currency to see what that may mean. People are concerned with crypto assets, as well as all this work around what's happening with partnerships and trying to keep a hold of that. Do you see one or two things emerging as kind of the core of our focus here over the next few years, or is it just going to be there's a lot to respond to and we need to be agile?
Honestly, what comes back often is the shiny objects, and I'll use crypto as a shining object right now. So, a central bank digital currency comes up daily and at the board where I work, and yet that's something that's probably further down the range in terms of it becoming a reality. Even though we have people who are working on that and they're doing great work, it's not the most, in my view, it's not front and center what I'm most concerned about. Where I think we can make some progress relatively quickly are with the use of tools. I keep coming back to AI as just one example, but there are tools that are out there right now that we can actually make better use of. When I talked about the provisioning of credit services to individuals in the US, those are real-time things that are priority for us now, right? Central bank digital currency in comparison sounds great. It's one of those things I'd love to have the digital dollar at some point, right? But the idea of, is that the most pressing thing today? No, that's when I talk about 3 to 5 years from now. And I'm not saying that it has to be that long, but the longer term horizon might have that in there. Right now, I have people who are showing up every day saying, hey, what if I use this particular application, an app, and I connected this to my system? Do you have any supervisory concerns around me doing that? Those are the things that are happening right now with fintech bank partnerships that we're getting on a day-to-day basis. And more often than not, we're saying, yeah, go ahead and do it. Put in these types of safeguards. Bill, to me, that's where we can make these inroads in the next 1 to 2 years with the understanding that these bigger things will come. So priorities are more in the near term, creating the service platform that we can deliver some of these things to consumers quicker and faster. The longer term, 2 to 3 years out, we've got faster payments. Everybody's working on that. Those are all great. Digital dollar will come in that. But making and demystifying finance for the average American citizen is the goal in the near term. And the way we do that is through existing means. Part of this is education. Part of this is using those applications and cutting down. We used to talk a lot about things that were in the future. The future is actually happening every day. So I'm kind of excited about those near-term things. And the last thing I'll say, which is going to be a surprise since I'm a regulator, Bill's a regulator, and as regulators and supervisors, what we do is we do out and do exams, right? So some of this we are going to be checking for. And what we're doing is actually opening up the way we do supervision to embrace many of these things. So that's happening at the same time. So I got priorities for the firms. I got priorities for the supervisors. In between there, the Fed does its own activities. We're dabbling in that. And the provision of financial services is not standing still. So again, a real exciting time. The pragmatic things first. Let's get those things done. Add that supervisory overlay in a seamless fashion. It doesn't hinder, but helps, right? and we put in the safeguards. And I'll go off script for just a minute here, and that's things like cyber, right? Whenever I get into technology, we can't help but talk about cyber. In the same manner that we're taking on technology in this innovative space, there are criminal elements out there that are trying to intertwine their practices into what we're designing. So we got to keep our eyes open, and we got to be vigilant about the safeguards that need to be in place whenever we introduce a new technology. And, we're all working remotely. We've learned how to do that. Everybody has a virtual private network at their home, but you probably don't know how many devices that are connected to your network right now, right? So there's the practical side that we have to build in, and that means security as well. So with that, full force on innovation with safeguards such as security, protections, risk management that we've been talking about here.
So I want to remind people questions if we've got them. We've gotten a few that we've tried to answer, and I think we've already answered. Here's one thing I think, and this, you went off script, so I'll go a little off script for you.
Yeah.
I often hear from bankers, well, I appreciate that the Fed's open and innovative, and I can talk to you guys, but we've got state supervisors, we've got the FDIC, you've got the OCC, you've got the SEC. What's your take? My own take these days is that the agencies are actually working fairly well together on a broad range of these issues in trying to be consistent. And while we're not a charterer, and sometimes that gives us some concerns just in terms of what other activities might be allowed at banks, I do have the sense that there's a lot of communication going on around these issues, and that's probably for the benefit of all.
Yeah, I'll start with the state first, Bill, because a lot of this, the state supervisors are telling me and the other agencies, hey, we want to be a part of it. We want to be relevant. So they are part of the dialogue. I'm happy about that. They may not have as much time or ability to engage as we can do at the federal level in comparison. The opportunities that I have to go to New York versus Georgia, for example, in terms of dealing with those states, New York has a bigger base. They have a lot more activities. So you might see a little bit more of that. But Georgia is a state where we think the same thing is applicable, same as Pennsylvania, right? But my points are in certain parts of the country, the activity might be a little different. And with the states starting out with generally have smaller resources, what we're trying to do is to help them leverage our resources and our base. So that's why we try to share these platforms with them. We add the CSBS, the Conference of State Banking Supervisors, if you will, to a lot of our activities to, again, make sure that they're part of it. And then moving on to the other agencies, there's one, Bill, where sometimes we have in the past competed, right? Who's going to get there first and all this and the like. And we started out with that sort of mentality. One organization, one FBA got their innovation office open and they were open for business. Another one didn't call it an innovation office, but put an individual in charge of that. And then we are a third agency. We have, like I said, my innovation policy section. And what I'm pleasantly surprised about is, for example, with the RFIs and some of the things we're doing, in real time, we're talking. So this isn't a go off and work on something at the Federal Reserve for 5 months and then go talk to the FDIC. It's more like every day, my team's talking to the FDIC and talking to the OCC, and in real time, we're exchanging this. So that's why we do things like we're doing a tech sprint right now, and that's based on the idea that we need to get out, engage, and do that jointly. So these sort of things are being done in collaboration, more so than maybe what we've done in the past. So the tech sprints are happening, innovation office hours are happening, and all that's about the type of dialogue we need to have. And I can actually say I've been inclusive in terms of the way I've been thinking about it. My team has been thinking about it, and I'm seeing that at the top of the organization down. This might be off topic a little bit, Bill, so I'll warn you guys in advance. What is good is when you know your colleagues at the other agencies, all right? And with some recent changes at the OCC, for example, some of our Fed colleagues have migrated over there. First thing they did was to say, hey, can I take some of that work that you've been doing and do it at the OCC. I thought that was a positive. My colleagues over at the FDIC, they had some changes over there. Some people I knew from industry, give me a call right up. They said, Art, I'm here. Can we work together? So I think the attitude toward what may have been, stay in your lane, Fed, you're the bank holding company supervisor and the state member, FDIC, you're the state non-member, OCC, you're the national bank. A lot of that goes by the wayside because the technology is not a respecter of the charter. It is a respecter of the opportunities. And since the opportunities transcend, our traditional way of thinking, what I like about this new space is it's very collaborative and it's in real time. So I think that's a change. And apologize if I went a bit off script with the Inside Washington focus on who's who. But anyway, those are some thoughts.
No, even though we're up here in Philadelphia and it's, cheesesteak and pretzels, we pay a lot of attention to what's happening in Washington. And I think we do see, the agencies really, I think, focused on moving together. And I think the outreach with the states has been good. On that point, one thing I often hear from community bankers is, can you help us with the service providers? What can we do to bring service providers into this realm? What can we do to have them, from a community bank perspective, be more responsive? And of course, as you know, we do supervise service providers, and exam reports on supervisors are available to banks who using them. And I think, much like with this, we have an opportunity to convene things. But what are your thoughts on how we might support innovation at service providers as well?
Yeah. So, Bill, I can't tell you enough the number of times where we have been approached and said, hey, in the service provider world, can you make a difference? And most of the time it's about individual community banks not having the negotiating power to go one-on-one, if you will, with a service provider. But the fact that all three of the federal banking agencies, sometimes NCOA, and obviously the states are in these institutions, and can't we, the service providers, I should say, can't we help the regulated community, if you will, have better relationships? And can't we use our leverage? So here's a positive. The positive is that in terms of the way we do the program oversight of the service providers is evolving. And by that, it's more along the lines of less about more of the traditional, do they have the right controls in place? Do they have mitigating factors against types of risk and all that? That's going to go on. But what we're now asking is, hey, what about the introduction of a new technology quicker? What about the introduction of a new technology with the appropriate safeguards in a manner that isn't, just going to be a race to charge your clients more in the way of fees and services? Now, some fees are going to go up. I get that. I don't want to paint them with negatively a very dark brush, but it's the matter of it's getting cheaper. Like that hard drive I talked to you about cost me $89, right? So, I mean, the bottom line is technology has brought in some of these changes at a lower cost, but to do it at scale, they're going to have to change the way they've done things. And what we are doing is working directly with them on some of these types of questions. We can't tell them how to run their business, but we do recognize that we do have some leverage. So I'll give a moment of recognition to Governor Bowman here at the board, because she's aware of this and she's one of the people who routinely brings up these types of issues. Yeah, Art, how can we make these things more accessible to the community bankers? So through her subcommittee, this is one of the topics that has come up. She's been very active in working with that. We're going to issue some guidance for comment in the next week that will talk about third-party risk management. And we're asking a lot of questions in that guidance. We want to do it interagency, but one of the things is the third-party service providers, how we might address them. So you'll see that in the way of questions. And I just bring that out to share, Bill, is that we understand that we can use our leverage with these firms to get better outcomes. And that's what the focus has been from the top of the organization with Governor Bowman, all the way down to my staff members who deal with them through examinations and your staff who examine them. So the idea there is that we can do much better with what we have, and we're working to do that. Now, keep us honest out there, community bankers. We need to know where the tough spots are that you think need to be raised with the service providers. We know what we see, but we may not see everything because you're the client. And with that, I invite you to, just as we have our open office hours, use that in any other avenue to kind of share your views on where we think we should go in a different manner or more aggressively, if you will. And you'll see the guidance that I talked about a moment ago on third-party risk management. That'll be out in the next week. That's another opportunity for you to share your views with us on this topic. So, I mean, that's the way we're going forward. I can't help but think I don't want to always speak negatively about the providers because they do a great service, right? But they do a service for thousands of banks, and sometimes the individual service relationship gets overlooked. And that's what I think we need to hear from it. It may not be that we could be your advocate on it, but if you raise an issue, you're probably not the only community banker who's experiencing that problem. The issues that we hear about, we can address. The issues that we don't have any ability to do so. So share your views one way or another. If it's great, you like your service provider, that's good to know. If there's some things you think could be improved, I'd love to hear them.
So Art, one last question we got, and this is, I'm going to ask you to stretch your hat a little bit because you and I predominantly work on the safety and soundness side of the business, but we also have colleagues with consumer, and I have consumer affairs responsibilities. So somebody has raised, do consumers really understand some of the risk even with these partnerships? So for example, PayPal or Apple Cash, right? Your cash is out there. It's not in a deposit account. And even though there's access to your deposit accounts, it's not quite the same. Similarly with some of these investment platforms and robo investing that we see now where people are able, as you said, you're able to get a hard drive. Well, I'm able to invest in all kinds of exotic cryptocurrencies and things on a moment's notice without sometimes the safeguards and the disclosures that might go along with banking. What's our, to close out, kind of what's our take on this in terms of, risk to consumers and perhaps why bank and fintech partnerships maybe serve their needs better than anybody going alone sometimes?
Yeah. So Bill, I think when you talked about payment services like PayPal and the fact that you may have money stored there, one of the things that you have when that money's stored in a depository institution is you've got FDIC insurance. You do not have those with those other sources, right? So consumer education, I thought, was the main way to get to that. Now, whether or not you consider that to be a big determinant in where you place your money, the way I think about it is if that account if you went to make a payment and you thought you had $500 in that account and it wasn't there, would you feel robbed? All right. If you thought about it, if it was done through a bank, you would have had that safeguard. So a lot of what we're seeing now are on the consumer side, we need to do a bit more on the disclosure, and we need to have more education, if you will, for the public. They want to take advantage, that is the public, of all these things. I'm not opposed to that. But with that comes a certain amount of risk. So disclosure is one thing. Second thing is the bank partnerships. A lot of the names you've just mentioned, a number of them have circled through the board and said, I want to set up a relationship with a depository institution where that money is actually sitting in an insured account. And the reason they want to do that is because they are now getting wise to the fact that, hey, just because you can make the payment doesn't give it the safety and the surety that it has if a bank were doing that. So we're getting a lot more requests. We're doing a couple of trial programs right now with some of these fintechs that have a bank base. One in particular is pretty large, but we're doing it in a controlled way. And the idea there is to adjust the factors that pose risk to consumers in a manner to mitigate them, but we can't take it away because consumers, as you know, they want to have access to these sort of services in real time. So they are taking some risk of their own volition. And the best thing we can do as a society is to make those firms subject to the types of disclosures, not necessarily like the SEC does with publicly traded firms, but something along the line of a standard set of disclosures. And our folks in the consumer and community area are actively engaged in that. We got a whole organization, the CFPB, that's set up for that. And so there's some of it the board can do directly, but not all. But the idea that buyer beware. I couldn't say that enough in that space right now, simply because it is still wide open. It does have the risk that you just talked about. And we can only do so much because the consumer, just be careful about that. Now, banks can continue to do what I think they've done for, um, couple hundred years at least here in the US, and that is in terms of communicating the types of services that we have in the regulated space. The reason they're regulated is because they provide those securities. The unregulated space where some of this technology is being applied and these services are being provided, you don't have the benefit of that at the moment. And I don't want to regulate the world. That's not my point. I'm just saying making those sort of distinctions clear is where I think we could do service to the consumers in the United States and abroad.
So Art, as you mentioned earlier, a lot of this is about transparency and communication and understanding. And I want to thank you for taking the time today, because I think the conversation was really well focused on that. And I hope the participants walked away with thinking that, we want to learn as much as we want to be careful in what we do, but we do have obligations. So I really appreciate your time and your effort in all of this. It's good to see you. I mean, it's been over a year. We haven't had a chance to get together. Art and I spent quite a few years at the board together, but I really appreciate the work you, your staff, the innovation office, and everybody has done. And I really think just thank you for taking the time today.
And thank you, Bill, for sponsoring this event, your bank doing it, and such a responsible partner in this. So I really appreciate working with you. And with that said, you've got some other things I know you got on your agenda, so I'll say goodbye.
A few things. So we're closing out today's session. For those of you that have one-on-one appointments this afternoon, please get honor those. We will talk to you this afternoon in an environment where more specific questions are here to answer. And then tomorrow we will kick off again with the bankers panel for bankers to tell us their perspectives on partnership with fintech. So once again, Art, thank you so much. And everybody have a great afternoon.